Okay, for this video, we want to run through a simple calculation as to how to compute your net paycheck, right? So if you're an employee, you sign an employee contract with your employer. When you look at that thing, they're going to have your gross paycheck on there, but how do you actually work your way back to what your net paycheck is going to be, right? There's deductions for federal income tax, payroll tax, retirement plan contributions, health insurance, all these other kind of items. And so what we want to do here is run through a simple example so you can see how your paycheck is computed. Now, when we talk about net pay, we're looking at what is actually deposited into your bank account, right? So you know what your gross paycheck is because that's the contract you signed, but then you get a net paycheck. How did we arrive at those numbers? So net pay is basically your gross salary minus all deductions for federal income taxes, payroll taxes, fringe benefits, health insurance costs, and any kind of contributions to employer retirement accounts. So like if you have a 401k plan at your employer, those are contributions that could be deducted from your paycheck. So let's look at an example here. We have John signs an employment agreement to work for a company, and they're going to pay him $55K per year. That is his gross salary. And he's going to be paid once per month. So paycheck is going to be deposited at the end of the month. So he's going to get 12 paychecks or deposits per year. Now, John's company offers employees health insurance coverage, but they don't pay for the whole thing, right? So whatever the employee premium is, and that's the monthly cost, right? The company is going to pay 75%, and then the employee has to pay the remaining 25%. So 25% of the premium is going to come out of John's paycheck every month. So the health insurance premium for John is going to be $500 a month, which means the employer is going to cover 75%, $375, while John's got to pick up the difference, $125. Now, what's important about health insurance is under U.S. tax rules, the health insurance piece is a pre-tax deduction. In other words, you can deduct the costs of the health insurance that you are paying as the employee before calculating your FICA taxes, so those are the payroll taxes, and the amount of federal withholding taxes that have to come off your paycheck. So John's $125 a month times 12 is going to be $1,500 per year. This is a pre-tax deduction, okay? Remember, pre-tax means we get to deduct it before we start calculating the payroll taxes and the federal withholding taxes on his salary. Now, what about retirement? Well, John is also eligible for a 401k plan, and the company is going to match 5% of his contributions. Now, John decides he's going to contribute $200 per month. So there's going to be $2,400 per year put into that retirement plan. Now, 401k contributions are not a pre-tax deduction for payroll tax, but they are a pre-tax deduction for federal withholding tax. And we'll talk a little bit more about that later. So let's look at the mechanics here. How do we calculate John's annual paycheck? And again, I say annual paycheck because we're going to use the annual numbers here rather than break this out month to month. Because it'll make a little more sense, I promise. So we have John's gross pay, right? In John's case, he's got $55,000 per year. This was the salary he negotiated. Now, payroll taxes, let's talk about those. Payroll taxes comprise two components. We have Social Security and we have Medicare. Social Security is 6.2% on the gross wages that are subject to payroll tax, while Medicare is 1.45%. The Social Security wage limit for 2022 is $147,000. So what this means is that you as an employee, you pay 6.2% up to $147,000 on those wages. And if you make more than that, the extra wages aren't subject to Social Security taxes. They will still be subject to Medicare, but at least the Social Security tax, the 6.2%, isn't being applied on any income you earn over $147K. Okay, so let's look at John's payroll tax and his net pay computation here. So the first starting point is the health insurance deduction. Remember, John has to pay $125 per month for his health insurance. The total premium is $500. So the employer is covering most of it, but he's still got to pay something. So he's paying $1,500 per year. So that is the first deduction coming off of his annual pay. Now, the reason why this is important as a starting point, because again, you don't pay Social Security taxes or Medicare taxes on any kind of pre-tax deductions for health insurance premiums. So when we look at his Social Security tax computation here, 6.2%, we're multiplying it by 53,500. Okay, because his gross pay is 55,000. We're deducting the 1,500 in health insurance premiums that John is paying. And so we take 6.2% times that amount. We have 3317 as the Social Security tax withheld. Same applies for the Medicare, right? 1.45% times the amount that is the amount of 55K minus the pre-tax deduction for the health insurance. We got 53,500. So those are the first three items that are coming off of John's paycheck. We have the health insurance premiums, 1,500. That's what he's responsible for. Then we have the Social Security tax and the Medicare tax that are coming out of his wages as an employee. Now, when we look at the federal withholding tables, those are a little more complicated beyond the scope of this video, but the federal withholding tables based on his net taxable pay is going to come out to be about $500 a month or $6,000. So $6,000 is the amount of federal income tax withheld that's going to be coming off of his paycheck. Okay, so that's the fourth piece that's being deducted from his paycheck. Now the last piece here is the retirement plan contribution. So remember up here, John wants to contribute $200 per month to his retirement, so he's going to put $2,400 per year. Now this is a traditional 401k plan, so the retirement contributions that he's putting in, there are pre-tax deduction with respect to the federal withholding taxes and the federal income taxes, but they are still subject to payroll taxes. Okay, so the $2,400 put in per year, they're coming off his paycheck. The amounts are not a deduction and arriving at what the Social Security tax and Medicare tax amounts are. That's why we are using this 53,500 number. But it's still a deduction from his paycheck, so we need to factor it in arriving at his net pay. Now let's look at the table here, slide 2, and see how all this works together. So the gross pay he's got here is $55,000. The pre-tax health insurance deductions, this is the employee portion, right? So this is what he has to pay, and it's going to come off his paycheck immediately. So it was $1,500 for the year, so that's the first deduction. And then recall we have the Social Security taxes and Medicare taxes. These are the rates at that contribution base, right? So $53,500 are the wages that are subject to Social Security taxes and Medicare tax. So we've got our $3317, $776, and then we've got the federal income taxes being withheld of $6,000. And then the last item there is the 401k contributions made by John are going to be $2,400 for the year. If we take his gross pay and we lop off all of these deductions, we arrive at a net paycheck for the year of $41,007. Okay? So when John's looking at his annual payroll tax statements, he sees that, okay, I got $55K per year per my contract, but I only had $41,000 deposited in my bank account. Where did all that money go? This is the breakdown, right? So this is the breakdown he can expect to see on his payroll tax statements. And this is also the breakdown that can be mostly reflected in your W-2. So your W-2 is going to show the amount of Social Security and Medicare taxes withheld. It's also going to show the amount of federal taxes withheld, federal income taxes. So this is what you will report on your Form 1040 to apply to your tax liability during the year. And then the 401k contributions is also being reported. The amount of 401k contributions that you have coming out of your paycheck is what's reported on the W-2. They don't report the match, right? So whatever your employer is matching, that's fine, right? I mean, that's not subject to tax for you. It is a deduction for your employer, but the amount that you have coming out of your paycheck will be reported on Form W-2. And if you have your W-2 in front of you and you're looking at it, what you'll see is that in box 12, there will be a code, box 12, code D. Box 12, code D, is the amount of elective deferrals that you had made to your 401k. What you'll also see is if you look at box 12, code DD, so 2 Ds, is the amount of your employer paid health insurance, right? So remember, John paid this much, the amount the employer paid is going to be the difference, that 75% portion. That is reported on your W-2, but it's not subject to taxes. So you really don't have to worry about that one too much. But you'll also see in boxes 4 and 6, you'll have the Social Security tax withheld, the Medicare tax withheld, and then in box 2 is the federal income tax withheld for $6,000. Okay, so I hope that helps clarify some of the kind of confusion around how net paychecks are calculated. Obviously, this list isn't all inclusive, right? I mean, there are a lot of other items that could be deducted from your paycheck. But in practice, what we see is these are the main ones, right? You have contributions to retirement plans, and you have the pre-tax health insurance pieces, and then obviously all the payroll taxes. So if you're looking to kind of calculate how your paycheck is computed, this is a good starting place. So I hope that was helpful. If you have any questions, please leave me a comment below, and I look forward to seeing you again on the next video. Thank you.